And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, friends and traders. Welcome to the Market Forecast. I am Dan Hodgman. It is Friday, November 4th. The week is coming to a close. I hope you guys have all had a great week so far. If not, totally okay. I don't know why, but my room here seems extremely dark. So please grit and bear with me on that one. I've got the lights on. I moved into a new condo. It's almost a 180-year-old building. Lighting has been a struggle. But nonetheless, you don't really need to see me. We'll talk about some of these markets. But like I was saying, I hope you guys have had a great week. Remember what Fridays are all about. Fridays are the day where you come in and preserve anything you've done this week. If you've had a good week, you do not give it back. If you've had a rough week, the ultimate goal is to put yourself in just a little bit better position, but not to completely recover. That's what Fridays are all about. We had a volatile move here at 7:30 this morning. Unemployment number came out a little bit higher than expected. I think the consensus was about 3.5, but we saw 3.7 on the unemployment number. Could lead to a little bit of volatility here this morning, post FOMC on Wednesday. I mean, talk about a week, right? You got Fed, you've got unemployment, we got CPI now coming around the corner, so lots going on. Those big economic release numbers are important to keep an eye on what's going on. For multiple reasons, for trading, as for the health of our economy too. So we had big moves overnight. Crude oil ripping higher on news that China's going to be easing COVID tensions over there. Equities, both S&P and NASDAQ kind of staying inside. Gold getting the upside move. Gold's feeling happy here. Almost completely recovered back to the high off of the Fed number. Euro staying inside, and the 10-year note really quiet right now on 10-year note. So those are just a couple of the products we're going to take a look at here. We're going to talk about. But before we dive into that, I just want to glance at just some stuff to keep your eyes on here today. I forgot to adjust my filter. Let me click that button there. Pretty light day all around on earnings today. Hershey bars, they came out. Did pretty good. That's about it. CBOE Global, they did pretty well as well. Looks like my computer is pushing some limits here. Give me just a second. All right, that should do it. Close that one out too. All right, so earnings are pretty quiet. And like we said, you had unemployment this morning at 7:30 a.m. Central. Other than that, we got the Baker Hughes rig count coming in at noon. With oil being up to $92 right now, which is 4.2% move. They've only been open for 50 minutes. Baker Hughes may have a little bit of an impact, or may be worth looking into here today, keeping an eye on. So let's go ahead and take a look at our charts here and see what we've got coming up for today. Let's go ahead and start with our daily in crude oil. All right, so we had weekly kickoff high right up here at $91. As you can see, this market made that move all last night, even into this morning. But even pre-open, we were up to through weekly kickoff high. What I'm looking at right now is I want to see how this market reacts up here at $92. We've seen rejection once. We saw it again. We've seen impacts right around $92 multiple times. Why isn't this moving? Here we go. We've seen a lot of reaction right around that $92 over the last few months. So as we approach that, $92 is a key level. If you guys paid attention to me on the The Limit Up podcast, Jack and I were talking about some of these levels a while back. I said if we get below 92, I like our opportunities to the downside, but 92 for me was a very pivotal level. So I'm going to continue to sit here and keep a very close eye on a 92. When we look a little bit closer, what do we got going on really here in crude oil today? All right, so like I said, we saw after last night, this market has been on an extreme tear. We saw hold up a little bit at Wednesday's value high in the overnight session as soon as London kind of got going. There's a little bit of hesitation, but that market, once it broke through, it's like a boxer. It's going to take in a couple of hits, and eventually that level is going to break down. That level finally broke down, and here we go on the tear to the upside, just shy of $92 right now. All I can say is be very careful in this market. We have seen extreme volatility over the last year. We have seen $10 moves. Not that I'm saying I expect a $10 move today, but I'm pointing out that this market can get extremely volatile. So be patient in your trade today. All I can say to you is 92 is a key level for me. I'm going to be really patient before I do anything. If we see breakout above 92, maybe we'll see this range continue. If not, maybe we'll get some rotation back inside. So to me, 92 right now is a key level. Let's keep our eyes on that one. Next, let's go ahead and look at the S&P 500. The big dog here. Obviously, we have 4 straight down days. Looking today potentially for a nice little pop with unemployment. Yeah, a little bit worse than expected on the actual number, but let's be realistic. 3.7 is still a great number, and I believe payrolls are looking extremely good too. Where's that bullet point? Yep, payrolls better than expected. Private payrolls. So, I mean, just all across the board. Non-farm payrolls better than expected. So those numbers, much better than expected, may lead this market into a nice directional upside move to end our day on a end our week on a positive note. Again, Hoag's got a lot of levels here. I'm not 100% sure on most of them. So we're going to go ahead and just walk right into our 30-minute chart. All right. So here's what I love. We're still kind of trading right inside yesterday's range. Not value, but yesterday's range. And here's where you got value low. Point of control right down here at 37.45. Settlement price a little bit lower, 37.27. All right, so we've got value, point of control, and you've got settlement price down here right at value low of yesterday. So what I'm looking at, if I see this market stay inside of range from yesterday, or value from yesterday, then hey, that's where I'm looking. I'm looking to just work it sideways, fade my extremes, and bang out a couple great trades. If not, now here's where we're at, right? We're still floating, trying to accept above value high from yesterday. We tried a little bit in the overnight session. We had numbers come out. We still have 35 minutes until market opens, so be patient, sitting on your hands, wait until that market opens. But if we attempt to break out, what are we looking at? Well, I really like right here, 37.80. And if we can continue higher, obviously we've got unchecked point of control from Wednesday back here up at 38.48. Again, that would be a huge move for Friday. But hey, wilder things have happened. If we rotate lower, all I'm looking at is yesterday's swing low to value low. Not looking for anything crazy. Again, it's Friday. Be patient. Don't feel like you got to press your luck and try and sign out of here early. I know I will be doing exactly that. Next, let's go ahead and look at the NASDAQ. So NASDAQ setting up pretty much the same as the S&Ps. The one difference here is S&Ps are well within the range of John's weekly kickoff levels. Yesterday, we ended our day below weekly kickoff low in the NASDAQ. Now we're pressing, trying to accept back inside that range. So on a higher time frame, we may see this market struggle to get higher, unlike maybe S&Ps have a little bit more of an opportunity to move higher. Now again, levels are strictly there for reference. Does not mean one thing or the other. It's truly a place that you're looking for potential opportunity or a reference to see if this market may do something in this area. All right, so we checked yesterday. We checked the swing low from that prior move before we saw that press higher. This week's all been down. We came and checked it once again. Do we continue lower? Do we move higher? Well, let's look at our 30-minute chart and get a little bit more of a shorter time frame perspective. Like I said, we're sitting right on weekly kickoff low, which is dead center of yesterday's value. This market is still very comfortably with inside value. Obviously, we saw that fast, abrupt downside move on the number. Again, trading a number pre-market open. We'll just be patient. We got to see what happens at 8:30 when this thing gets going. So what I'm looking for here, same thing. I'm looking range bound because that's how this market is setting up at this moment. I'm going to look to value high, look to value low with point of control in dead center there. Not a bad setup or design for me to be looking at before this market tells me anything else. If I'm inside, that's exactly what I'm looking for. I'm looking to see where can I see this market react. If I see it react at value high, I'm going to look for rotation to the inside. Now, if we break out and this market starts to rip higher, yeah, we've got that unchecked point of control again way up here back from Wednesday. We're still only a day and a half away from that point of control, so it's not too far out for us to not think it may get checked again. But again, with it being a Friday, it's hard to see that big of a move on a Friday. What I may see is us move up here towards, let me double check which one this moving average is. It's not what I clicked on. All right, this is our 100 period SMA. Okay, good deal. Because it wasn't showing over here. So we got our 100 period SMA. I love that. So key level there to keep an eye on too, right? Maybe we see this market kind of pull back into that moving average. All right, next, let's go ahead and look at the gold. And again, this is where my markets that I'm not looking at on a daily basis start to fade away. Gold within value, and then within this frame that John has been looking at, we got the nice bounce so far last night off the low side. Did we go check the high side? We got high side all the way up here at 1668. So let's look at our daily or our 30-minute chart here and get an idea, because truthfully on a daily we are working sideways with a nice overnight move so far. Obviously this market has opened up, so this is now an open market. We're seeing some good opportunities. When I look a little bit closer, what am I looking at? What am I really seeing here? It wants to go check this swing high up here at 1672 potentially. This market is screaming higher. And as a trader, what are we looking to do? We are looking to maintain and trade with trend. This is really happy with a lot of the jobs numbers that just came out this morning. Right now, this is a prime example of sitting on your hands. Jack and I talked about this a little bit yesterday in the podcast. If you listened to, we talked about when markets get these big, quick, fast moves, I see a lot of traders trying to catch it, right? And what happens? By the time you get long on this move, it's on the high side, and then that little bit of a pullback comes in, you get shaken out, and then you find yourself chasing. These are the times when you want to sit on your hands a little bit. What do we talk about all the time with trending markets? The basic principles of trending markets. Number one, the classic cliche, trend is your friend. And number two, when a market is trending higher, you want to look for weakness to get in on that trend. You don't want to be getting in on strength. You want to find weakness to go ahead and trade with that trend. Now, it's not always going to work perfect, and it's a blanket statement, but that's really what you want to be looking for. You want to wait for these markets to show a little pullback if you want to be in on that long side. Now, obviously, if you don't want to be on the long side and you're looking for shorts, then yeah, you have to be selling highs, but anyone will tell you you don't sell highs in a trend up market that's showing complete trend to the high side unless you have a very key level and strong reasoning behind it. So that's what I'm looking for here today. I don't really envision much rotation to the downside. With decent job numbers, this could see this market continue higher. All right, lastly, I've got the 10-year note. Inside range, inside day. Whoops, I want to be looking at our daily here. All right, so talk about a downtrend, huh? No doubt about it. As rates go higher, we should expect bonds, notes to be moving lower. Rates went higher the other day, continuing to press this market down. But I like our setup here on the daily. Setup on the daily, very inside. I can tell you for a fact, if I'm looking to trade this today, I like this high side of value. We saw it reject numerous times in the overnight session. Obviously, this market has opened up. I'm going to ignore this long wick here. I know people got shaken out there. That was our number. Now I'm back inside this range, and so I'm going to try and trade range. I'm looking right here, down at point of control from yesterday, and I'm going to look at value high. That's where I'm looking for this market. If I'm looking for breakout, I need to see acceptance outside of either of those. All right, for the most part, those are our markets here today. Just double check if we got any questions. Also, thanks for tuning in with me. John will be back on Tuesday, so he's still got to grit and bear with me on Monday. But I will tell him. I'm going to see him tomorrow, so I'll tell him you guys all miss him. Let's see here. Just want to say good morning to everybody. If there's any questions with something ripping like this, where can I find limit data? Don't want to break top step risk criteria. JD, limits, super easy. When we look at equities, put a quote board up. Currently, NASDAQ says plus 1.6%. If that moves to, we know the limit during regular trading hours, during open pit session, is minus 7%. So if that market goes down to minus 5%, that's where we want you to be out. Other markets are not hard, static limits. So things like crude oil, it needs to be a $10 move within a 1 hour period. I believe that's what it is. And it's a rolling 1 hour. At no point have I ever seen crude oil go into limit. So we can't sit there and be out 2%. So it's truthfully, pay attention to the equities. If you're trading NASDAQ or Russell or the Dow or the S&P, that's going to be, that's a static limit of minus 7% during regular trading hours. Quote boards are you're going to be your best bet. Obviously, if we get close to any sort of other circuit breaker, Top Step is going to be contacting the whole user base to let you guys know. You've seen it in the past when we saw NASDAQ I think like a month or two ago, getting pretty close. Same with the Russell. We sent out an email. Markets are approaching limits. Please be cautious. And again, it's not a rule. It's just that an area we don't want you to be in. We're not, just so you know, we're not going to be sticklers about it. We're going to get you out of your position. We're going to want you to be flat. And hey, don't do this again. All right. So awesome, everybody. JD, it's simple. Within 2% of the breaker, don't trade. And we know the breaker is minus 7%. So I've had this question asked to me like a million times, and everyone says it's so confusing. It's within 2% of the limit. So 7% is the limit. Subtract 2 from it. Boom. Minus 5%. Be flat. The only thing I look at is a quote board for it. Awesome. But I appreciate the question. Yes, never sell into an uptrend on a Friday. Great post there, Spencer. Awesome, you guys. Well, it is the weekend. I hope you guys don't stay on the computer too late. Try and get out and enjoy your weekend. I know I will be. I'm getting out of town here this afternoon. Going to try and get out and enjoy some Wisconsin fall weather. And other than that, that's what I got for you. Markets open in 25 minutes, or equities open in 25 minutes. So get a cup of coffee, get a bathroom break in, maybe crack an egg and scramble it up. And we'll see you at 8:30 when these markets open. Good luck to everybody and have a great weekend. Take care.